Hello, and welcome to the Cryptocurrency News channel. Before I go on an adventure to the dreaded lands of Sock City to search for a haircut these days, because hair is just getting really annoying. I mean, look at it, dude. Going insane, bro. Going insane. That hair, dude. But anyways, I'm going to go for a haircut soon. But we're going to talk about the ideal type of strategy slash portfolio for newbies. Now, this is my opinion. It is not financial advice, but I think this is like both kind of like a safe way to look at the market and a safe way to allocate your money. If you're a newbie, so say if you have like a couple $1,000, maybe like 5 grand, right? So the thing right now is that you've noticed from the hopefully that you've noticed from history is that the altcoins, while they do go up, they don't really go up until Bitcoin starts hitting new highs. Because when Bitcoin starts hitting new highs, that's when mainstream and the media and everything actually finally say that Bitcoin's in a bull run, and that's when like the big channels actually give a lot of press to crypto and say it's a good investment. Remember last time CNBC essentially like told people how to buy XRP when XRP was at its max. You don't want to wait until that long, but when it hits above 20,000, then like it'll be a hot topic again. So before it hits 20,000, you don't want to be all in Bitcoin, but I think you would be good to be in about 60% in Bitcoin and 40% in altcoins. Because yes, there are altcoins, Chainlink, Tezos, that will actually outgain Bitcoin, but realistically, like most of the market is not going to outgain Bitcoin. Bitcoin's dominance has never fallen below 60% in like the last 2 years, and it's above 65 right now. So while there is some swing trading to be had, and if you want to swing trade, you need to study a little bit more. If you just want like a more solid, longer term holding strategy and buying strategy between Bitcoin and altcoins, I would say about 60% in Bitcoin right now, 40% in altcoins, while Bitcoin is under 20,000, or at least while Bitcoin is under 15,000. When Bitcoin gets closer to 20,000, when you see it going up to 17, 18,000, then you might want to start reallocating. Around maybe 17, 18,000, you might want to be like 40% in Bitcoin and then 60% in altcoins. And when it reaches 20,000, I would say maybe like 20%, maybe even 15, 10% in Bitcoin if you're feeling a little risky, and then maybe 80, 90% in altcoins. Once it gets above like 22, 23,000, or once it gets above 20,000, because that's when some of the people are going to get a lot more confidence in the market and actually buy out into altcoins. Remember, Coinbase research has actually said that only about 60% of their people start in Bitcoin, but only about 24% of those 60%, or about 18.4% of those people really only stay in Bitcoin. So you're missing out on 84 to 85% of that money flow into altcoins later. Now, they won't flow into altcoin until confidence comes in back in the market, which, like I said, is that Bitcoin at 20,000 mark. Now, what about altcoin allocation? I think if you're one of the ones that only have about 10, 20% in Bitcoin, I think you should have another at least 10, 15% in Ethereum. I think Ethereum is the other one that's kind of safe. A lot of DeFi and ERCs coins are actually built on it. I know there are other mainnets that are going to surpass it in technological features and stuff, but actually like surpassing Ethereum and getting the customers over from Ethereum is going to be very hard, and I don't think that's going to happen in quite a while. Even though Cardano will and other mainnets will actually be technically superior and can handle many more transactions per second, a lot of times the best technology doesn't actually win the show. It's the one that's the earliest and with the most adoption, and Ethereum is going to be that for a while, at least for right now, in the next year or two. So I think Ethereum is another safety bet, and I think it actually has more potential than Bitcoin. So if you want to be like 10% in Bitcoin, 20% in Ethereum, I think that's okay. So outside of those coins, what should you actually invest in? If you want to be a little more safe, invest some in XRP. I don't think the burst potential is as high with XRP. It's already worth billions of dollars, and realistically, it's not going to take over the world or anything, but it will be used for some remittances. It will go up in a bull run with everything else, so it's not a bad investment and has a good safety value. So if you want to be a little bit more safe, invest maybe another 10, 15% in XRP. If you're really going for the gold and you're really going for large gains, then actually look at other coins like Cardano, which I do believe is actually going to launch Shelly and Goguen. If you don't think Cardano is going to launch Shelly and Goguen, don't invest in Cardano, obviously, because then you're just investing in air. So like look at Cardano, look at Chainlink and its partnerships. I do believe Chainlink is a little bit more volatile, so your risk factor has to be a little higher to invest a lot in Chainlink. Plus, Chainlink has already pumped 10, 15x since last year, so it might not pump quite as much in the next bull run, but it might as well because it's still fairly low in market cap. And outside of that, it has a lot of good partnerships. A lot of DeFis are using Chainlink oracles, and so is R3. So there's a lot to be said for Chainlink. You can also look at other solid coins like ICX. Now, ICX might be a little smaller, but I still think it's one of the safer coins. And that is because ICX has gotten basically promises of use from the Korean government, and more or less like the Korean metro system, I think, has actually mandated icon loop. So that's, I think, is a pretty safe coin because you know it's actually going to get usage. I think that's just as safe as some of the top coins, even though it's much lower. And I would actually allocate a decent amount into ICX. Yes, it's confined to Korea, but the price and supply it is right now, it can be many, many times greater. Remember, it's like 20 cents right now. So if it goes to the last all-time high of like 10 bucks, you get like 50x. And that's a pretty good return, regardless of what kind of investment you're talking about. So like I would allocate a little bit definitely in coins like that. Other, I think, safer coins would actually be like projects like VET and BAT, which are expanding, have partnerships, and define use cases. I also do think like Tron is actually worth looking at. Yes, you might not like Justin Sun. If you really don't like him, don't invest in it. But the thing is, like, I can stomach him because Tron actually has a lot of good developments recently. Like, it's not like fake news that they acquired DLive and they're integrating DLive. It's not fake news that BTT now has 39% staking on DLive, at least temporarily. So based on things like that, you should actually look at Tron as not a bad investment. I mean, I know a lot of people say it's a scam, but I haven't really seen too much evidence from the coin itself that it is a scam. Yes, Justin Sun's antics like suck, and his own PR thing with Steemit sucks, but realistically, he's actually acquired a lot of good assets that he's actually funneling into Tron and BTT, and you should definitely be looking at Tron at least for maybe like a 5% or so investment in your portfolio. So like other big coins, maybe in the top 20, top 30, top 40, that you actually see a lot of big partnerships in. It doesn't have to be the ones I mentioned. Those are just the ones I mentioned offhand because those are the ones that I'm looking at the most. That should comprise, like, even when Bitcoin hits 20,000, I think that should comprise, if you're having like 10% in Bitcoin and 20% in Ethereum, the rest of those coins should actually compensate for probably the bulk of your portfolio. I would say 55 to maybe 60%. Now, you have about 10% left over. And this is actually what I call the kind of like the playful, really risky coin bet. Now, what does that mean? It means that these are coins like Ken, like CSC, maybe like BitTrue. Although BitTrue, I think, is a little safer than those coins that I just mentioned. Like Ken, like CSC, that you actually look at. These coins have massive amounts of potential. For instance, we talked about Ken a lot. If the SEC lawsuit works in their favor and we have a bull run, they could probably go up to like, 0.2, 0.3%, and that's several hundred X. That's possible because they've been at 1.5% before, and that's like 200X already. CSC, if they actually score a big partnership with an online casino and they start using them, they can actually go up a lot too. So small coins like that you like, it doesn't have to be those two. It could be like any. It could be like any coin that. It could actually be any coin. That you actually like that has a very small market cap. That's not in the top 100. I mentioned several of those yesterday. And those you could actually take a look at, especially smaller coins with staking features, because people really, really like staking. In fact, even in those bigger safe coins, you should actually pick at least half of those. You should pick coins with staking because that gives you passive income. And even if your coin doesn't rise, you're getting that slow passive income. So you're actually making some money. So I would say like half your portfolio should actually be staking coins that you can stake for anywhere between 6 and 20% staking. Now, those coins are more likely to go up than anything else anyways, because people are going to be attracted to passive income, especially in times like this. But even if those coins don't go up and you guess wrong, you're still getting that 6 to 20% income, and you won't at least be at a loss or just being stable. So that's really the logic in that. So like basically keep most of your assets in Bitcoin until it hits about 18, 20,000. After 20,000, keep maybe like 10% in Bitcoin, 10, 15%, up to 20% in Ethereum. And then the rest, like, and then the other big coins like XRP, VET, like safer ones like ICX, BAT, Cardano, any combination of those coins, I would say like another 50% of your portfolio, leaving 10 or 20% out for the kind of like, I guess, fun or risky coins, because you don't want the fun or risky coins taking up a large part of your portfolio because they actually might just go kaput anytime, and you don't want your entire portfolio going kaput. It's just like you don't want your entire portfolio in stocks to be penny stocks, because if they're all penny stocks, you might lose everything. And we know what happens to degenerate gambling or degenerate gamblers during a massive drop off or recession. They lose. They lose big, and you don't want to be one of those guys. So like the last 10 or 20%, think about CSC, think about Kin, think about like really, really small coins. Even something like, like Funfair, which is really small. I think that could be a very good investment. And other coins like that you just really like. Maybe even like Tika Tawari's, some of Tika Tawari's coins if you can get them ahead of time. So that is kind of what I have to say for today. That's, I think, how a beginner should actually allocate and kind of change their portfolio as the market actually moves. Once again, below 20,000 Bitcoin, mostly in Bitcoin, maybe 60% in Bitcoin, and then another 20% in Ethereum, and then the next 20% just pick like some safe altcoins and some risky altcoins. But once you get to 20,000, that's the really big growth time. So maybe only stay like 10, 15% in Bitcoin, 10 for 15% in Ethereum, maybe 50, 60% in like the bigger, safer altcoins, which are still significantly smaller than Bitcoin or Ethereum, but fairly safe because they have a use case. And then the last 10 or 20% in coins like Ken or CSC that can actually make you a lot. So that is what I have for today. Let me know if you agree, like and subscribe, and hit that bell notifications button. Thank you and have a nice day.